Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we're looking at ticker symbol PSHG, that is performance shipping. We're going to run our handy dandy calculations, see if the stock is worth $1.88. We're also going to do some advanced charting on the Think or the Swim. We're going to look at any patterns we could potentially find with this stock, supports and resistances. And we'll also see what institutions and hedge funds are doing. So, without further ado, let's go ahead and shrink our heads and hit that like button, thumbs up button. Okay, so again, the stock is trading at $1.88. If we zoom all the way out, we're going to see that this stock was trading at $55 million. So, what we're going to do is we're going to go to the weekly chart and we're going to zoom in. And that's kind of what we're doing here. We can see this stock was trading at around 76 cents for the good remainder of March, April, May, June, July, 6 months. About 6 months, this was trading under a dollar. Now it's at $1.88, and you can see that it's literally been consolidating. We'll say right here. It's been in this long Darvis box. And you can see we've tried to break up once, twice, three, four, 5 times. We've tried to break this box. We have not really tested this support here around $1.50. You can see we are just slowly descending here in price. We're going to go ahead and check and see, what the stock is actually worth. This is actually considered a penny stock as well. The momentum actually has not really even started on the monthly chart. So this is good. It shows that if we can get enough buyers to accumulate the stock, we can see momentum move towards the upside. Money flow is going up and relative momentum looks like it's drifting down. So the stock does feel like it is with the bears currently. And this drift has really been happening since June of this year. So about 4 months now, almost 5 months. So I think this is with the Bears. However, there is some really fantastic things to note here, which I'm excited to jump into. I want you guys to just take a look at this here and tell me what you think looks good while I kind of just buy some time to drink some coffee. All right, congrats, you found everything. So the price to earnings and the forward price to earnings are absolutely insane. It does suggest that this stock is severely undervalued, severely with a capital S. Their quick ratio is a 5, meaning if they close their doors tomorrow, they would have enough cash to pay off any debts, loans, notes, etc. They do have some debt, you can see here, but they are addressing their debt, which is good. Given their quick ratio and cash position, I'm assuming they have a lot of cash. They could probably wipe this out, but it's probably not that much debt. So we'll take a peek. Sales the past 5 years showed resiliency here. Just kind of going through EPS sales year over year. So we are seeing some decline here. Institutions own 6%. We'll double check that. Gross margins are 50%, 57%, which is fantastic. Every $100 they spend, they get back $157.27. They are very profitable. This is a very low float stock. So that means if someone comes in, there's 10 million shares available at $1.88. If someone comes in with $20 million tomorrow, they could take this thing to the stratosphere. Recommend is a 1. That's the highest recommendation you can get from FinViz. So we do see that the stock used to be worth $54 million. We're going to cut the fat here and just jump in. So kind of a beige flag I noticed. 2023, they did 108 million in sales. 2024, their trailing 12 months is at 90 million in sales. So we'll see if we can find a pattern where they are losing ground quarter over quarter here. They do have, looks like they may have offered a dividend. Let's just go here. So they did offer one dividend back in 2021, but that was it. I'm trying to see. Yeah, they gave a 1 cent dividend on October 2020. Exactly right here. So that all matches. That's good. Okay. Other items to note. I mean, sales are just up and to the right. That's fantastic. Earnings per share. This is not good. Huge negative, positive, negative, very low positive, lower positive. So I guess a, a pro and a con here. A pro is they go negative, positive, negative, positive. Now they're positive. So this should have tracked to be negative, but it was positive. 2024, we should see positive EPS. We'll go below and confirm. I don't like this. You can see that they've drastically increased the shares in the pool. 2022, they had 4 million shares available. 2023, they have 12 million shares. As of 2024, still 12.28 million. So just be on the lookout for potential dilution or adding more shares to the pool, diminishing the value of the shares. Let's run the numbers here. This is going to be actually, I'm kind of excited about this. So, another thing that I do want to call out that is often missed by a lot of people, this company's sales exceed their market cap, which means this stock is severely buried, meaning this could be a real true hidden gem. The fact that we're seeing a stock that is profitable, very little debt, very low float. I mean, we'll confirm below if it was a one-off or if this company is actually solid. This is an area of opportunity, arbitrage. People call it arbitrage. So, very potentially undervalued. We only include the market cap in our calculation if it's over 1 billion. This calculator was specifically made for companies like this, where there's no market cap really. They have potentially negative income, not profitable, and some sales. So this will be a fun one. They are profitable, 55 million, 90,000. Sales, they do 90 million, 830,000. All right, and let's go on down. We're gonna have to do a little bit more of a deeper analysis here. So Q1 this year, they made 22 million. Q1 last year, they made 29 million. Gross profit down 6 million. Q2 this year, they made 20.5 million. Q2 last year, they had 31.4 million. Gross profit down 10 million. So this could be good or bad. They could be becoming more efficient. We can see that they're spending less money to make the same. I mean, if they could have spent another 1.4 million in Q1 this year to make another 6 million, that would have been nice, but there's obviously some push and pull here. So revenues are going down. That is not that is a fact. Profitability, their net income Q1 last year. Okay, look at this. Q1 2023, they did 4 million in net income. Q1 2024, 10.9 million in net income. Q2, 9.73 this year. Q2 last year, they did 17.9. So about a wash there pretty much for this year, Q1 and Q2. Gross margins hovering around high 50s, low 60s. That's fantastic. That is all good. And then their EPS here. Their EPS should continue to be positive. So that's good. But one bad quarter could really change things here. So no real red flags here other than their revenues going down, but they are kind of spending less to make more. They are becoming more efficient. If you look at their net income for Q1 2024 compared to Q1 2023, that's a double in net income profits in millions. However, Q2 this year, they about missed by 50%. So give or take. I mean, it looks like they're becoming more efficient, really. And we're going to see that here as well. I just going to make sure it's USD. It is USD. Okay. So cash, they have 61 million. The most they had was 85 million back in Q3 2023. So we're going to go back here and we're going to add 61,740,000. And debt, they have 43 million 750,000. Okay. Uh okay, you can see that they're paying down the debt. They went from 53 million down to 43 million, so that is good. Just gonna drink my coffee and observe really quick. Okay, total assets 310 million, total liabilities 56 million. So assets dwarf liabilities about 5.5 to 1, which is good. Every one liability they have 5 assets. So that is good, in my opinion. And again, you can see that they are paying down the debt here, 53 down to 43. Uh, quick ratio is very high. Um, total liabilities decrease, total assets increase. That is huge. That is huge. That is great. Total assets, you can see it went from 81 million. So I think this is where their assets that they did have were bringing them income here, and now they don't have those same assets that they had in Q2 and Q3 of 2023. So definite, definitely an observation there to consider. Um, it's like a 10%. They're getting a 10% return off their assets, their total current assets. And you can see the total assets there. Okay, so that makes sense. They need more assets to make more money, but they are becoming more efficient. Um, yeah. So I don't really have a problem with this. Let's continue on with our calculation that might provide some insight. Um, so now we're going to take our shares, 12,280,000. So we're seeing a potential stock price of $13.35. That is huge. Uh, because a lot of times when I run this calculation on these small companies and I get a number that is 10, 5, 10x, it's worth taking a bite, if you know what I mean. So, uh, absolutely beautiful. We have an analyst price target of 575 here. Mine is more than twice that. Um, this is really healthy consolidation in my opinion. It's been in the same area for over a year now. So it's going to show that as the price goes and drops down, there is demand for people to purchase this stock, which we can see why. So um, I like this. This is a Greek company in Greece. So you have to think about tariffs. You have to think about um, the port strikes, which is over now, but you have to think about a lot of macro headwinds that we don't normally usually think about. And because this is a shipping company, uh, we want to make sure we're accounting for the cost from one port to another, shipping containers. For this company specifically, since they got rid of assets, that could be maybe boats that they got rid of. Maybe they got rid of uh, a route. Is this their page? This is all they got? Who we are, our fleet. Kind of a cool website. They have 7 Aframax tankers. Okay. It's pretty cool. Uh, so this is their biggest, the P Monterey. So Okay, so they're getting more tankers, looks like October 25th. I'm sorry, October 2025 to January 2027. Cheers to that, I guess. Mm, so that will double three new build and one new build. So LR2 and one LR1. So that's going to double their revenues. Are they accounting for the costs currently? Mm, it doesn't look like it. Interesting. I mean, it's depends how they are booking it. So that is interesting. I could okay, so I mean, it makes sense why this company's probably getting more lean as they get ready to release these next tankers. So I like this. That's pretty cool. Oh, sorry, I didn't build up the institutions. So institutions and hedge funds currently own 6.23%. That is older data. New data shows 6.26%. Not a huge increase there. Let's see what we got. So we have Sphinx Investment. It's actually pretty recent. They just restated their position. Mango Shipping Corp decreased by 0.12%. Intracoastal Capital added 77%. Crazy. And George Economou restated his position. Is George the CEO? Please. Nope, he's not. So we don't know who George is, but that's fine. Morgan Stanley just took, looks like they restated position. Citadel added 70,000 shares. Privium added 30,000 shares. No Van, we have Renaissance Technologies. They're always early, and they bought in August. Let's see what August is. I mean, this has been flat for about a year, so they bought around $2. So I mean, this is kind of a deal at the moment. So I mean, overall, I like this. Um, it, I mean, it's been consolidating for 1 year. I think it's ready to move. Let's take a peek here. All right, so we are just gonna draw some loins. Wrong one. Basically want to just map out any potential supports and resistances. This looks good like that. Oh, looks like this company's right at a critical resistance point here. That's pretty cool. Okay, so this is our line to break. I mean, we are right here. This is good timing. Okay. This is again gonna be the one to break. We had a huge gap here, but it got filled. The gap has been filled. I mean, not much other to really chart here. I mean, this is doable. Um, and then just going down. $44. So I think this company needs a lot of wins back to back to really get moving, especially through here. Um, I mean, this stock is, I would say, valued probably around $13, which is doable in this area. But again, their revenues are going down year over year. They are building four new tankers, LR2 and LR1. So as much as this excites me, I kind of want to see okay, it doesn't hurt to maybe take a position here, and I'm speaking for myself, not for you. Take a starter position here. So if you're investing 10,000, 1,000, 100, whatever money, think about 10% of that adding today, and then after their earnings or leading up to earnings, maybe another 10% of those funds. Um, and the point here is to kind of build a long-term position around $1 to $2 as the company doubles and releases their new fleet in October 2025 to potentially 2027. So that is again 2 to 3 years, well, 1 to 3 years from now. Yeah, so it's do you wait and see if the company gets more efficient, or do you just kind of take a starter position if the stock goes down and the company still remains healthy? Continue to add. You can see they're adding shares here to the pool every year as well. So maybe it makes sense to be on the sideline. But again, if they added another 10 million shares here, let's go ahead and so instead of 12.28 million, let's make it 22.28 million. This is still a $7 stock, which is fine. It just makes the shares you would have less valuable, barely. So, interesting situation. I mean, it's got the juice. I mean, not the juice. It's got the makings of a stock that could really move really quick. And again, if the company comes out with some type of press release or earnings update or financial breakthrough, I mean, this thing could really move because look, I mean, it's only 10 million shares. Um, Finviz has this as a rank as one, which is the best of the best. So really up to you here. I like this one. Yeah, so that's all I've got for this. I mean, it's you can be on the fence, really. We'll probably see a move here, but um, maybe moving up to $2, but then we'll probably see a light tap of this channel, which has been confirmed. So, you let me know what you think. It doesn't hurt really if you have an investing mindset of 5 to 10 years. Why not throw some money, let it sit, see how this company does. Um, yeah, it's kind of compelling. There's some good things happening for the company. They are profitable. So, yeah, overall, I like this one. This is something I would consider getting into and just adding when it goes on sale, as long as the company is, again, being efficient, being smart, etc. So that's literally I've got. If you made it this far, consider subscribing. I appreciate you for watching. I'll see you in a couple of days.